Welcome to my YouTube channel. My name is Michael Mwansalioba. I'm going to take you through financial accounting, particularly relating to books of prime entry and on cash transactions. The learning objectives of this presentation include the following. I'll explain what are cash transactions. I'll explain the purpose of cash book. I'll also demonstrate how we prepare analytical cash book, and I'll talk about source documents for entries of a cash book. So what are cash transactions? Where goods or services are exchanged for cash in form of notes and coins, or are paid for using the check system and debit cards, the event is a cash transaction. In other words, this is where there is exchange of goods and services for immediate payment. Cash transactions are involve the exchange of notes and coins with goods or services, as I've said, and these are taken or used to compile the cash account. A cash account is found in a ledger. Okay, a cash account is a form of a ledger, and a cash book does perform a dual function. One, as a book of original entry. Secondly, as a ledger, book of original entry as well as a ledger. Take note that transactions where checks are used are actually going to be compiled or are going to be used to prepare a bank account. A cash book in this respect does look at those transactions that involve actual cash movement, and then those transactions that involve the bank transactions. To keep the records more informative and analytical in this respect, we prepare a cash account to look at all those transactions which do not involve bank or checks or bank transfers, or using the checks in this particular respect. So we have a cash book which has cash account, and we also have a cash book which has a bank account to actually separate the two. Both are cash transactions. What is the purpose of a cash book? As I've said, a cash book is a book of prime entry, or known as book of first entry or book of original entry, to record cash transaction. As the terms imply, this is a book where the data from the source documents are first transcribed into the books of business. That's why this is known as a book of first entry or book of original entry. Usually, businesses would like these cash transactions analyzed in a cash account. This is a cash book where the transaction analyzed by type of receipt or type of expenditure. So this assists when it comes to understanding what type of transactions have been experienced by a business, so that you can know exactly what caused that particular payment, or on what item or what expense or what was the money used on, or how, from where was the money received. So that's what the analyzed cash book assists us to do. Let's look at an example so that we may understand how a cash book is prepared. As I've said, when you are looking at cash transactions as a source of a cash transaction which is going to be recorded in the book of original entry, be reminded that for the cash side, we'll have the receipts cash book and also the payments cash book. For the bank side, we will also have the receipts cash book and the payments cash book in respect of bank transactions or transaction involving bank. So here we have Muila, a retired engineer, who received interest from his fixed deposit account of 8,000 Zambian kwacha. He opened a business bank account and withdrew 3,000 kwacha for office use. Now we're going to look at a number of transactions in this month, the first month of trading. So we have a number of transactions in the month of trading of April, given that 1st April sold goods for cash, receiving 540 Zambian kwacha net of VAT. The VAT is charged at the rate of 16%. April 4th, borrowed 12,000 kwacha from Zanaco Bank and the check received the same day. April 8th, paid wages in cash, 150 kwacha. April 13th, cash sales, Zambian kwacha, 400 net of VAT. April 13, banked 200 Zambian kwacha from the cash till. April 14, drew from bank for private use, 100 kwacha. April 19, paid cash for repairs to furniture, 130 Zambian kwacha. We proceed. Look at April 20, cash purchases of stationery, 150 kwacha, all tax exempt. April 22, Ngosa paid his account in full, less 5% cash discount. April 25, paid salaries by check, 300 kwachas, 300 Zambian kwacha. April 26, bought goods for resale in cash, 246 Zambian kwacha gross. Paid rent on the 28th April, 520 kwacha. This was paid by check, and received commission for selling scrap cards amounting to 270 by cash. April 29, paid Livingstone Motors 10,000 kwacha by check for truck bought area. Then on the 30th April, settled Kunda's account by check less cash discount 5%, amounting to 227 kwacha. So what are we required to do? We are required to enter the transactions in the appropriate day books, post to the ledger, and extract the trial balance at the end of the month. Okay, so particularly for this question, we are going to use it to demonstrate how we can enter these transaction details in the book of original entry, particularly the cash book. So we start looking at each one of these transactions. Remember, the day book or book of original entry is normally not regarded as an account. So what happens is that a day book or a journal is simply more like a register that captures the transactions from the source document into the books of original entry. Okay, so it's more like a memorandum to tell us what has taken place, not necessarily opening a bank account, an account rather, because an account by implication means that you are going to have either an entry debited or an entry credited. So where you use double entry rules to enter these particular transaction details, that is an account. So for day books or journal, these are mere listings. So that's what we are going to see. So first April, we have sold goods for cash, 540 kwacha net of VAT. The VAT is charged at 16%. The VAT is charged at 15%. So since this is net of VAT, we are going to see that we are going to calculate 16% on the figure 540 to get what is the VAT. Now, if you sell goods for cash, it simply means that you are going to receive the actual physical cash, and we are going to look at the receipt side of the cash book for this cash transaction. So let's look at the cash book. The cash book, cash receipt side. Okay, so what happened is that we received how much? 540. Because this cash book is analyzed, it has columns, okay, to take care of the various items on which cash is received. In this case, we have cash sales, we have trade receivables and other receivables. Just to complete the capturing of information, we also have how much VAT has been charged on this particular transaction. So where applicable, we have to indicate what is the VAT amount, so that when it comes to VAT account, we are able to also use that to determine how much is the net VAT, if net VAT, if it is not net VAT payable or net VAT receivable. So net VAT payable will end up making us make a payment to Revenue Authority. Net VAT refund will end us claiming VAT from Revenue Authority. So in this case, we have 540 kwacha. So when you calculate 16% of 540 kwacha, 540 kwacha are going to come up with 86 kwacha 14 way. Let me just demonstrate how we do this particular calculation. We do this particular calculation. Okay. Here we have 540 kwacha. Okay. You multiply by 16. Okay. Then divide by 100. So that will give us the 86 kwacha 14 way that you see there. So that's how we arrive at 86 kwacha 14 way received there. So meaning that the total amount that these particular sales were made, or the customer paid a total of 626 kwacha 14 way, which is VAT plus net amount sold. So the business will collect 540, the 86 kwacha 4 tengo will be sent to, is supposed to be sent to ZRA or Revenue Authority in this particular case. So that's the transaction on the 1st of April. Let's get back and see what happens to the next transaction date. The next transaction date, April 4th, indicates that 12,000 kwacha was borrowed from Zanaco Bank and the check received the same day. So what is involved there is a bank. So the bank got affected. We go and see the bank receipt side. So where we are going to enter the 12,000 that evidence that has been received from this bank to in our business. So we go to the bank side receipts. So bank side receipts. So we see that there is a figure of 12,000 which was received as loan. Analyzed in the column loans here, we have 12,000. Aligned in the figure here, we have 12,000. Let me just correct this one. Okay, so it's supposed to be 12,000, not 12,000, not 12 million, 12,000. Okay, so that's the entry. You can see this is the cash book, but the bank portion where we're talking about the cash book, bank receipt side. So that's why we received the 12,000. So we list it there as having been received 12,000. So that's what we have. Then we go look at again, look at the next transaction. See the whether it's going to affect the bank side or the cash side. So we look at the next. This is on the 8th of April. 8th of April, paid wages in cash. Paid wages in cash. So the cash side of we are going to see this in the payments cash side. So we go to the cash book, cash payment side. So cash book, cash payment side. So we see that stationery was paid for the tune of 150 there. Okay, and it's analyzed to record that this is a stationery payment. Okay. We move on to look at the next transaction. The next transaction is telling us that there was on the April 13 cash sales of 400 net of VAT. So meaning that when you say net of VAT, means that the figure does not include the VAT component. The figure does not include the VAT component. But we have to calculate the VAT so that we capture what is the VAT so that the information is complete. So let's look at how we are going to enter this transaction that took place on the 13th of April involving 400 kwacha net of VAT as cash sales. So we received the cash, so it goes to the receipt side cash. Receipt side cash. So this is the cash book cash receipt side. We are told that we made a sale of 400 net of VAT. So this is 400. So again we go and calculate the VAT. So this is 400. Calculate the VAT. Now since it is 16%, 16 over 100 is simply going to give us 0.16. So we can multiply by 0.16. 0.16 and get your VAT as 64. So when you look at that, we have calculated 64 as VAT. That's what is appearing here. So means that the customer paid a total 400 plus 64, which is 464. So our claim on the 464, our claim is 400, and this 64 is supposed to be paid to ZRA. Okay, so that's how it is. Remember, you should note that when you are VAT registered entity, okay, you act as an agent for revenue authority. So when the VATable supplies are made, so you get your part, and the other part you remit to ZRA. So that's how we account for this VAT. So we move on to look at the next transaction. The next transaction took place on the 13th April again, where 200 kwacha, we banked 200 kwacha from the cash till. We banked 200 kwacha from the cash till. Now, this is an example of a contra entry. So, when we talk about a contra entry, we refer to a transaction where a double entry is complete within the same recording, within the same book, the cash book in this case. So we find that there is just a relocation of this asset of cash, in this case coming from the till, taking it to the bank. Okay, the relocation, so money has not moved out of our business to another outside environment to the business. It is still within the business, which has just moved from one location to another location. It has moved from the cash box to the bank. Okay, still relating to the business. Okay, so let's look at how we record this contra entry where we have banked 200 from cash till. So the bank account, the bank side will receive 200. The cash side will give 200. So we go to the bank side. The bank side will show that we have actually received 200. The bank side will show that we have actually received 200 here. Okay, that is the C. So now in the folio, which is more like an index column, you see a symbol C. A symbol C. This symbol C is indicative of the fact that you have a contra entry. You have a contra entry. So that's what it actually tells us. You have a contra entry. That's what it will tell us. So this is a symbol to show that this is a contra entry, as I've explained. So meaning the double entry has been complete within the same cash book. So one, the cash book on the bank side, we have seen that the bank has received, because we took money from the cash box, took it to the bank account, deposited there. So the bank received. And where is it coming from? From the cash till. So we go back to the cash receipt side, the cash payment side rather, because that's the one which gave out the cash. So go to the cash payment side. Cash payment side. Look at the cash payment side. So we're going to see that there is a contra entry again here with a C here, showing that this is a contra entry. That's what it means, showing that it's a contra entry, and the 200. Okay, so that's what completes the recording of this banked cash. Okay, so that's what we have noted. We go back to look at another transaction date. Go back to look at another transaction date, and this particular one is relating to April 14, where drawings are made from the bank for private use. So drawings were made from the bank for private use. When you draw from the business for private use, that is normally termed as drawings. And drawings, effectively, you are actually disinvesting. You are drawing from your capital contribution for private use. So let's see how that is done. Where is it done? where was this drawn? It's from the bank. So the bank paid. So we are going to look at the cash book bank payment side. It gave out 100. We have to capture that in that case. So let's look at the cash book bank payment side. We are going to see that we have actually recorded 100 kwacha here, drawings on the 14th, and we've indicated it under drawings column there. Okay, so we have listed it there. Effect is listing, as I've said. So that's what has happened. Let's look at another transaction and see what happened. Okay, the next transaction we are looking at is April 19, where cash was paid for repairs of furniture to the tune of 130. So the cash book cash payment side is giving. So it's going to the cash book is giving. So we are expect to record this in the cash book cash payment side. So we go to the cash book cash payment side. So cash book cash payment side, we are going to see cash book cash payment side. We're supposed to look at, is it a bank? Let's confirm. Okay, we are told cash paid for repairs to furniture, cash paid for repairs to furniture. So it's supposed to be cash book cash payment side. Okay, and that is the 14th. So we're supposed to have cash book cash payment side. So we're supposed to have cash book cash payment side. So include it here. Let me look at this one. Look at this one, inclusion. We include a row below, and then we include that this is the 14th. Okay, 14th. Let's look at that. 14th. And we are paying for repairs. Okay, we indicate this is for repairs. Okay, since it is cash that is giving out, so we indicate that is cash giving out. And how much is being given out? What is given out is 130. 130. So that is what is being given out, coming from cash. Okay, coming from cash. So we indicate here under repairs 130. I should have indicated this one. I don't know how it missed out, but the total is there. Okay. We have that figure included. That figure included, and we are saying it's coming here. We have the total already there. Okay, we have the total already there. So that is the payment. So we go to the next transaction. What happened in the next transaction? We see 20th April, cash purchases of stationery at 150. All tax exempt. So means that the VAT is not payable. This does not attract these non-VATable supplies. They do not attract VAT. So that's why we're being reminded all tax exempt. Okay. So April 20th. So we go cash purchases. Okay. So we paid cash. So meaning that we go to the cash book cash payment side, because the cash till is the one which was giving out 150. So we go and see cash payment side. Cash payment side, we see 150 there. Okay, and that is stationary. Okay, it's listed there. So we go to the next transaction. Okay, next transaction. The next transaction is on April 22nd, where Ngosa paid his account in full less 5% cash discount. That is 667. So go to Ngosa. This paid his account in full cash. So the cash book, cash receipt side received this amount. So we go there and indicate that. Okay, receipt side. So Ngosa is here. He brought in 667. He brought in 667. So that was what was paid. So that was what was paid. Okay. Then we look at now you have noticed that nothing has been entered under VAT. Nothing has been entered under VAT. This one was a credit transaction. Ngosa had got goods on credit from us. Now this time around he had money, he came to pay. So the time that the transaction took place, when it was entered as a credit transaction where Ngosa was recognized as a debtor, okay, the VAT was calculated then on the sales. So this is simply a payment. So he's paying up what is due to him. So that's why you have not indicated something on VAT there. Okay, so we move back to look at the next transaction. We have paid salaries by check 300. Okay, so the cash book bank payment side is giving out 300. So we expect this one to be captured on the cash book bank payment side. So cash book bank payment side will actually give us this particular record. So we have salaries 300 here, and indeed captured under column of wages 300, the bank payment side. See, giving us that particular payment. That bank payment side has given us that particular payment. Okay, so we move on to look at again another transaction. Look at another transaction. In this case, we are looking at the 26th April, where goods for resale were bought in cash, 246 kwacha paid gross. So when you see a figure indicating gross, it simply means this figure, in this case 246, includes VAT. VAT is already included in there. VAT is already included in there. So how do we do that? How do we separate VAT from this figure? I'm going to show you how you calculate this using the VAT fraction. So let's go to the cash book, cash payment side, because the one which was paying for these goods, cash book, cash payment side. So cash book, cash payment side, cash book, cash payment side. What do we have there? We have 246. So you can see the total is 246. But we need to separate what is the VAT component included in 246. Okay? That's what we're looking at. How did I arrive at 39 kwacha, 36 ingwe, and the net amount 206 kwacha, 64 ingwe? I'm going to show you how this is brought about. So let's look at this. To start with, you should take note that when the figure is given as VAT inclusive, if VAT is at 16%, then the cost is always at 100%. So when you add to 100%, it means that the VAT inclusive figure will be 116%. Now, what is the VAT component in the 116%? The VAT component in the 116% is only 16. So if we want to find out, or we want to isolate the VAT component in the gross amount, or amount which is given as gross, we need to apply what is known as a VAT fraction. So how do we do that? Okay, we look at the VAT component, which is 16, then divided by 116, which will now give us a fraction. This fraction is given as that. This fraction is given as that. So when you multiply this by 240, you are going to end up having this amount. Okay, so 240 VAT fraction. Let me just make calculation. Are they correct? Let me see. We have 246 is gross, and the VAT component is, if we calculate this one is 116 because it has VAT, and this one was wrong. So we're going to look at this figure, say 16. Let me just calculate again. We have 16 divided by 116. Okay, 116. That's what we have. Now we multiply that by 240. The 240, and that's 240. Or 246. Sorry, 246. So sorry about that. 246. 246. When you multiply that, we get 393. Okay, 393, not 39. Okay, 393. Okay, so that's what we have. So let's look at that. 3393. Okay, so if you remove that one from 246, we have this one, that is 246 minus 33.93. We're going to end up having 212.07. 212.07. So this one should be 212.07. Okay, so even this one should be 212.07. 212.07. Okay, 212.07. So yeah, that's how it is. So we add this to give you 246. 246. Okay, so that's what we have. Okay, fine. So then we move on to look at the next transaction. What is the next transaction? The next transaction is on 28th April. Paid rent 520 by check. Received a commission for selling scratch cards of 270. So there are two things there. We paid rent, okay, 520 by check, and also received commission and received cash. So the cash book bank payment side will be going to capture the 520, and then the cash book cash receipt side will capture the 270. Okay, so let's look at the cash book cash receipt side, where the 270 is captured first. Okay, 270 captured here as the commission. We also go to a bank payment side and the cash book bank payment side, where the rentals are going to be captured or listed as a payment. Okay, payment side. Okay, rental 520 captured here as a payment. Okay, so that's what we have for that. Then let's look at the next transaction. What happened? What happened on the next transaction? Okay. The next transaction is a transaction that took place on the 29th of April. I paid Livingston Motors 10,000 by check for the truck bought earlier. So there was a transaction on credit. Now this company, Livingston Motors, will finally pay. Or we paid Livingston Motors 10,000. So the cash book bank payment side is giving out the 10,000. So we're going to see this transaction listed under the cash book bank payment side, 10,000. So we go there, cash book bank payment side, cash book bank payment side should be able to record this particular transaction. Cash book bank payment side, we have Livingston Motors captured 10,000 payment, and this is a motor vehicle. As you can see there, it's indicating motor vehicle. Okay, so okay, fine. So that's what is captured there. Let's look at quickly and look at the other transaction. What happened? What happened to the other transaction? Okay, that is on the 30th of April. Settled Kunda's account by check less cash discount 5%. So we are making a payment to Kunda. Kunda should have been our supplier. So we had got certain things on credit. Now we decided to pay Kunda on April 30th. Okay, April 30th, tune of 227. Okay, tune of 227. Go look at that. Payment by check. So Kunda was paid 227 is recorded there. Okay, so now you can see that we have actually listed all the transactions in the cash book, either the bank side being a payment or receipt, or the cash side being a payment or receipt. So these are simply mere listings. So at the end, we just total the columns, okay, to find out what is the total amount under each column. And each column is going to be headed by, each column is named, and that name of the column normally represents what account is going to be found in the ledger, what account is going to be found in the ledger. So this analysis helps us to identify what receipt or what payment is relating to, what payment or receipt is relating to, for us to open appropriate ledger accounts from those particular transactions. Okay, so that's what has been seen in this particular regard. So now just a quick run through, before I conclude my presentation. There are a few notes that I've taken note of in this particular regard. A few notes that I've taken note of in this particular regard. I want to draw your attention to those notes. Particular notes. Okay, fine. For instance, when it comes to this cash book, cash receipt side, okay, a few things I need to emphasize on is one, the cash book is the only book of prime entry that is also part of the ledger. The ledger is the main book of account. What it means that, as I've said, the cash book performs a dual function. It's both a ledger and a book of original entry. So it does a dual function. Then second point is that you note that the column for other receivables would further be analyzed into commission, okay, and received and rent received, etc. To be consistent, if you see the term other receivables have indicated on the receipt side of the cash book, then use other payables on the payments side as well. So that is being consistent. Okay, so the column of trade receivable capture amounts received from customers, okay, as payments on account. Okay, trade receivables means that these are accounts for debtors. So when if there's a receipt, if they're indicating some amount from trade receivable, means that the debtor who was supplying goods or services on credit has finally paid. So that's what is captured under trade receivables. Then value-added tax is not calculated on amounts from customers since it is already recorded in the sales table. Okay. So what happens is that when there is a credit transaction, the moment that is captured, okay, the VAT is calculated and accounted for. So when the customer finally pays, you cannot calculate VAT because that will be double payment or double. You are going to have the figure captured twice and overstating the VAT account. So you only calculated once when the transaction took place. It's a credit transaction. Okay, value-added tax is, however, calculated on cash sales and recording a value-added tax column for posting amount to ledger. Why? Because this is the first time that VAT is being calculated. That's why it is included there. Okay, as opposed to credit transaction. When the credit transaction is done, that particular transaction also prompts us to calculate VAT at that time. So when the customer pays later on, VAT has already been accounted for in that transaction. It cannot be recorded twice. Okay. Then also the columns headings are actually names of accounts to which totals for each column will be posted in the ledger. I've said that the accounts are in this way are nominal in the case of income and real in the case of loans and non-current assets. So nominal, this relates to expenses and income. because these are transaction or accounts which are in name only. Okay, you don't see the physical presence or the physical aspect of it, but a record is kept and maintained for a transaction that took place. Okay, that's nominal. They are in name only. They are not physically there. They are in name only. That's why it's called nominal. On the other hand, they are real in case of loans and non-current assets. Real accounts are those which you can see and touch. So those are real accounts. The cash book usually starts with a balance representing the cash that remained in the till when the account for preceding account period was prepared. So the cash book will start with a balance brought forward from the previous accounting period. The accounting period can be a day, it can be a quarter, it can be a month. Usually when the transactions are of low volume, the transaction volume is low, you find that normally entities will close accounts or bring forward balances on a monthly basis. So that's what happens in this particular case. In this, where you have 8,000, you can see in the cash book above, the balance at start is not a transaction, so it will not be posted to any account in the ledger. Okay. So the other point which I want to make reference to is on the cash book payment side. Cash book payment side. The payment side of the cash book is analyzed again into amounts paid to suppliers. These are trade payables or creditors. Amounts paid for expenses such as repairs, and amounts paid for non-current assets, for instance, which you bought for cash. And the term other payments would be used if payments are made as a settlement of an outstanding amount owed to supplier, okay, or non-current asset, or to provider of a service on credit. Here, the cash book will therefore have more columns in practice than illustrated above. You see that I've just reduced the column just to give you a flavor of how you analyze the cash book. But this cash book can be analyzed in an extensive number of columns depending on what type of items you are dealing with relating to the cash. Okay, the column heading are actually names of accounts, as I've already told you, to which totals of each column will be posted in the ledger. Okay, so that's what the practice is. Accounts are nominal in the case of expenses. I've said expenses and income are nominal, they are in name only, and they are real in case of trade payables and other payables. Okay, so that's what I wanted to talk about. Then I also note that amounts transferred from cash account to bank account and vice versa are marked with a C. I've mentioned that this is a contra entry, meaning that two accounts are involved, the cash and bank account. And so the double entry completes within the cash book, as I've explained already. Okay, so posting the totals to the ledger will be actually explained in the next presentation. For now, I think it is enough to just know that you gather this information under these particular identified column names. Okay, so that's what you need to look at. Okay, so the bank account is also part of the cash book, just to emphasize, and entries in it are those for receipts of checks and payments by check or credit cards. Okay, so again, the bank account, as I've already seen, is analyzed in a similar way to the cash account. Okay, so we looked at the receipt side. Okay, we looked at the bank side. I think that ends our presentation, which relates to books of prime entry, cash transactions. Okay, so that's what we looked at in terms of this presentation. We looked at earlier on in another presentation. I made a presentation on credit transaction. Now today we look at cash transaction as in the books of prime entry.